Hello everyone, welcome to our next webinar. In this webinar we're going to be talking about our inflation package for Turkey today. We had a lot of popularity with this solution when we presented it in the Turkish language, so we've decided to do a webinar in English for global companies and anyone else that's interested in inflation. My name is Bradley Birch, I'm the sales manager, and also Yavuz is here today, and he's our head of SAP. On the screen, you can see the structure of the presentation that we're going to do today. We're going to go through Melasoft company introduction, and then Yavuz is going to take you through inflation accounting specifically in Turkey. Also our own inflation accounting solution, and then we're going to have questions and a discussion at the end. So Melasoft was established in 2013 and we're operating in the IT sector. We're headquartered in Frankfurt, Germany, which is where I'm located, and we also have offices in Istanbul and Ankara. We're always providing innovative solutions such as inflation accounting. We offer our services in SAP and non-SAP solutions. It's also important to mention we are a consulting company. We operate throughout Europe, and here on the slide you can see what our expertise is. So we can manage SAP projects. We have experts in modules, specifically logistics and finance. We can offer integration services. We can also customize applications. We can also outsource your business via consultancy, and we can also provide training services as well. And here you can see a map of where we're operating in majority of Europe, North Africa, and also Central Asia as well. It's important to highlight some of our SAP solutions. We also have SAP GDPR solutions. We have SAP Financial Solutions, SAP Integration Solutions, and SAP Smart Banking applications. We're also well known for our compliance solutions. We offer these to a variety of customers and very different industries. We also offer e-invoice, e-archive, VAT reporting, SAFT, e-transport, virtual warehouse, e-accounting slip, also recycling fee declaration, and our latest topic is inflation accounting. Other non-SAP solutions can be seen on the screen. We offer fintech solutions, also commercial solutions, software development solutions, and also blockchain solutions. We've also had or created our new inflation accounting webpage. You can see it on the screen here. It's sapinflation.com, and you can see everything about our solution for inflation for Turkey. I'll pass you over to Yavuz now, and he can take you through and guide you through inflation accounting. Thank you.
Hello everyone, welcome you all. I am Yavuz Durdak, and today in our today's webinar we will briefly go over understanding inflation accounting, a basic definition of inflation and inflation accounting, its significance and the impact of inflation on financial statements, and some methods that are used for inflation accounting. Let's start with definition of inflation. As you know, inflation is an economic term which is characterized by sustained and general increase in the price level. So price level of goods and services over a time period. This price increase results in loss of the purchasing power of the currency, and as a result, each unit of currency buys fewer goods and services than it did in the past. So a loss of purchasing power occurs in an inflationary environment. Inflationary is typically expressed as a percentage, which represents the annual rate at which the prices are rising. Of course, there can be many causes of inflation, but the major causes of inflation are, first of all, the increased demand for goods and services. This is one of the main reasons. Rising production costs is another cause of inflation. Changes in supply and demand dynamics of products and services, And finally, some monetary factors such as increase in money supply. This can be some very causes of inflation. Moderate inflation is normal in growing economy, but excessive or hyperinflation can have very significant effects on economy. Especially it leads to reduced customer purchasing power, and also it results in uncertainty in financial markets and some other economic challenges. After this brief definition of inflation, then what is inflation accounting? Inflation accounting is an accounting methodology actually, and it is designed for adjustment of financial statements in response to the impact of inflation. So in an inflationary environment, the prices are rising, and hence to handle this rising effect of inflation, the inflation accounting is used for mitigating the risks. What is the main objective of inflation accounting? It aims to produce a more accurate representation of a company's financial position. So the performance of the company may and also financial position of the company significantly affected from inflation. So in order to mitigate the risks and have a more accurate representation of this company's position, the inflation accounting is used, and the effects of inflation on the value of money over time is taken into consideration by using inflation accounting techniques. Inflation accounting involves adjusting various financial statements elements to reflect the changes in general price level, so it results in a more meaningful representation of the financial position of a company. So the reality, the economic reality of the company can be more feasible, can be more representable by using inflation accounting techniques. Inflation accounting is very significant because of several factors. First of all, the first factor is the purchasing power erosion. First of all, as we explained in the previous slide, in an inflationary environment, the inflation erodes the purchasing power of money. So it causes a misalignment between nominal and the real values of money over time. So without adjustment, financial statements cannot accurately reflect the true worth of assets, liabilities, and equity, and this results in misconceptions and other problems. The second factor is the distorted profitability. Inflation can distort reported profits by affecting historical costs of assets and expenses, because in inflationary environment, the value of assets and expenses changes over time. However, if you cannot consider the inflation effect, then companies may misinterpret the profitability, and this may lead to misguided decisions that are made by the stakeholders. So misguided decisions may result in wrong decisions, and this may cause other problems in the economy. Another significant factor is the asset and liability values. As the value of the money changes in inflationary environment, reported values of assets and liabilities also changes, and hence inflation accounting helps in adjusting these values to maintain the real values and the reliability of the economic indicators. So in this respect, inflation accounting is also detrimental. Another factor is the comparability across time. In inflationary environment, again, it is difficult to make meaningful comparisons between different time periods in terms of financial performance, because the time value of the money changes. However, if you use inflation accounting techniques, it provides a standardized approach for adjusting financial data, and as a result, it ensures consistency, and so you can make comparisons between different periods and for different performance measures. The next factor is the investor and creditor confidence. This is another significant issue, because the investors and creditors rely on accurate financial information to make their decisions. However, if inflation accounting is not used, then they can have wrong decisions, and as a result of these wrong financial statements, financial indicators, they may have wrong decisions as a result. Another factor is the regulatory compliance. In many jurisdictions, regulatory bodies require companies to use inflation accounting methods in preparing their statements. So adherence to these standards ensures transparency and consistency in financial reporting. In Turkey, this is the case. Turkey is an inflationary environment, so according to regulatory compliance, the companies need to adjust their financial statements using inflation accounting techniques. In this part, we will consider the impact of inflation on financial statements. First of all, distorted asset values. If we are in an inflationary environment, the historical cost of the assets may change significantly, and so as the value of the money changes, the value of the assets also changes during time. Without adjustment for inflation, the reported values of the assets on the balance sheets may not reflect their true value to the economic world, and this leads to understated asset values. Another impact on financial statements is the misleading profitability. Inflation affects the cost of goods sold, expenses, and the value of money. Without proper adjustment, reported profits can also be distorted. For instance, in periods of rising prices, companies may report higher revenues, but these may be offset by increased costs. So it results in an inaccurate representation of the profitability. Another effect of inflation on economy, on financial statements, is the inaccurate liability values. Liabilities, especially the long-term debts, may have been incurred at historical cost, and as a result, failing to adjust for inflation may lead to overestimation of the real value of these liabilities. So it impacts the assessment of the company's financial position and its financial health. Another impact is reduced comparability across periods. Without inflation adjustment, financial statements from different periods become less comparable because the time value of money changes, and hence it will not be possible to compare different financial statements between different periods. So comparisons may lead to wrong decisions. And the final impact on financial statements is the wealth redistribution effects. Especially inflation can lead to wealth redistribution. For example, the fixed rate assets and liabilities may favor one party over another, depending on the direction and the magnitude of inflation. So ignoring these effects can result in unfair assessment on financial health and performance, and again, this may lead to wrong decisions. So after these general definitions of inflation and inflation accounting and their significance and impact on financial statements, in this part we will briefly talk about some general principles of inflation accounting. Inflation accounting involves, as we said, adjusting the financial statements to account for the impact of inflation on the economy. There are two main principles used: the historical cost accounting and current purchasing power accounting. These are the two main methods used for this purpose. Historical cost accounting is a method that records assets and liabilities at their original acquisition cost. So in historical cost accounting, we do not take into account the price level over time. Under historical cost accounting, financial statements reflects the actual amounts paid for assets and incurred for liabilities at the time of transaction. So the financial statements reflect the historical values. Even if their market value change, they are reported at their historical rates. So in inflationary environment, the historical cost accounting methods can be misleading. On the other hand, current purchasing power accounting adjusts financial statements while reflecting the changes in general price level. So it aims to maintain the constant purchasing power of capital by restating both monetary and non-monetary items. Under this method, assets and liabilities are adjusted based on general price index or inflation rate, and this adjustment is intended to provide a more realistic representation of the company's financial position. So in current purchasing power accounting, the time value of the money is taken into account, and by using the inflation rates or general price indices, this adjustment is made and real values are calculated. In current purchasing power accounting, the main objective is to express all items of the financial statements in terms of their current purchasing power. So it results in stakeholders to assess the company's performance and their positions more accurately. Also, companies apply a general price index to adjust their monetary and non-monetary items. As a result, the financial positions and their financial health can be visualized by means of financial statements more accurately. So in this part of the webinar, we will talk about the inflation accounting in Turkey. We will briefly talk about the regulations and the conditions for inflation accounting, the tables that are subject to inflation adjustment, and some adjustment methods and steps for adjustment process will be explained in this part. In Turkey, as you know, we are in an inflationary environment and the inflation rates are higher. So for this purpose, there are two main regulations used. The first one is the Turkish Accounting Standard, TMS, which explains the financial reporting in hyperinflationary economies. The second regulation is the Financial Reporting Standard for Large and Medium-Sized Enterprises. It is again about the financial reporting in hyperinflationary economies. And the third one is the Tax Procedural Law, which regulates the inflation accounting process in Turkey. In this slide, you see the conditions for inflation adjustment according to a Tax Procedural Law. First of all, the first condition is the increase of the domestic PPI in the last 3 years, including the current year, is more than 100%. This is the first condition. If the increase in domestic PPI in the last 3 years is more than 100%, plus the increase in the domestic PPI in the current year is more than 10%, then according to Tax Procedural Law, Article 298 of the law, inflation adjustment for tax purposes must be applied. So there are two conditions, and if these two conditions are satisfied, then inflation accounting should be used. Here, you see in the first graph, you see the cumulative inflation of Turkey for the last 3 years, and you see that it has already exceeded the 100% limit. For PPI, December 2021, and for CPI, Consumer Price Index, it satisfies this condition in February 2022. On the other hand, for the second condition, the increase in domestic PPI in the current year is more than 10%, so both of the conditions are satisfied in Turkey. As of December 31st of 2021, the conditions requiring inflation accounting have been met, and the application has been postponed until 21st of December 2023 in accordance with the Tax Procedural Law. So the conditions are met in 2021, 31st of December. However, it is postponed to 31st December of 2023. So starting from 2024, inflation accounting adjustments should be done according to Tax Procedural Law. From the company's perspective, there are two conditions for making inflation adjustment. The first condition is being liable for income or corporate tax. This is the first condition. And if the companies are keeping book according to balance sheet method, then these companies should make inflation accounting adjustment. There are three main standards. The first one is the International Accounting Standard. Companies based in Turkey that use Turkish lira as their functional currency have the option to utilize inflation accounting in creation of their financial statements for the periods starting from June 30 of 2022. According to Turkish financial reporting standards, the initiation of the inflation accounting requires the issuance of the ultimate decision by the governmental institution KGK, the Public Oversight Accounting and Auditing Standards Authority. So the decision is waiting. And also, according to Tax Procedural Law, the implementation of the inflation accounting has been delayed until 31st of December 2023. In this slide, you will see the table subject to inflation adjustment. According to Tax Procedural Law, balance sheets should be adjusted by using inflation accounting methods. On the other hand, according to TFRS and IAS, International Accounting Standard, balance sheet and income statements should be adjusted for inflation. In inflation accounting, we have to make a distinction between monetary versus non-monetary values. For monetary value refers to the values that, despite changes in the value of the Turkish lira, remain constant in nominal terms and changes in the opposite direction to price movements. So foreign currencies are also considered as monetary value. On the other hand, non-monetary values refers to the values other than monetary values. So non-monetary assets and non-monetary liabilities are within the scope of non-monetary values. From the inflation adjustment perspective, the items subject to inflation adjustment are the non-monetary assets and non-monetary liabilities. And in this slide, you can see the items that are subject to inflation adjustment. For instance, for non-monetary assets, the common stocks, tangible non-current assets, etc., should be adjusted. For non-monetary liabilities, capital, premium reserves, profit from invalidation of shares, legal reserves, etc., should be adjusted for inflation. During this adjustment, which index will be used for inflation adjustment? This is another question. Two main indices, Domestic Producer Price Index, which is abbreviated as GÜFE, Yurt içi Üretici Fiyat Endeksi, and also we have Customer Price Index, TÜFE, Tüketici Fiyat Endeksi. Domestic Producer Price Index assesses the average changes in the price received by domestic producers for their goods and services over time. So it's an economic indicator that tracks inflation or deflation in production sector, and it can be used for tax purposes under the Tax Procedural Law. So if you are proceeding according to Tax Procedural Law, then Domestic Producer Index should be used in inflation adjustment. On the other hand, Consumer Price Index, TÜFE, examines the average change in prices paid by consumers for goods and services over time. It is a widely used economic indicator, and it is often considered as a key measure of inflation. So CPI index will be used for IFRS, International Financial Reporting Standard, and TRFS, Turkish Financial Reporting Standard. So if you are making adjustment according to these two standards, then the CPI price index should be used for adjustment. Also, we have an adjustment coefficient. It refers to the coefficient obtained by dividing the price index of the month to which the financial tables belongs by the price index of the month that is taken as the basis for adjustment. So after making this adjustment coefficient, then by using this coefficient, you can make the corresponding adjustment in your financial statements. On the other hand, for stock adjustment, we have two methods, the simple average method and stock turnover speed method. In simple average method, it calculates the average adjustment factor based on the average of price indices of specified period, and this average adjustment factor is then applied to the entire inventory. On the other hand, stock turnover speed method is used to calculate the duration the stock remains in the company. So the duration of the stock is important. So turnover is important in this case. And the adjustments are made starting from 31st of December and going back to the date reached according to the turnover rate. In this slide, we summarize the steps to be followed in inflation adjustment. First of all, the financial statements to be corrected are determined. So if you are using Tax Procedural Law, if you are proceeding according to Tax Procedural Law, then you need to adjust the balance sheet items. On the other hand, if you use the international standards or Turkish standards, then you need to adjust balance sheet together with the income statement. After this stage, the index to be used in the correction is identified. So again, if you are using Tax Procedural Law, you should use PPI. On the other hand, if you are using the standards, then you have to employ the CPI index in your calculations. Then monetary and non-monetary items should be specified. After the specification, details related to items to be corrected should be determined, and non-monetary items are corrected with the help of specified indices. Gain or losses arising from holding monetary items are also determined, and finally, the financial statements are presented in their corrected form. So at the end, we will have two financial statements, the one without adjustment, and the second one is the adjusted financial statement. So you can make the comparison among the adjusted and not adjusted financial statements. So at this stage of the presentation, we will talk about the Melasoft inflation accounting solution. First of all, we will have a brief introduction, and we will talk about the modules used and the components of the solution. We will talk about how it works and some key capabilities of Melasoft solution. And at the end, we will have the discussion and questions section. Melasoft's inflation accounting solution package that digitalizes your inflation accounting process by integrating and reporting inventory, fixed asset, and income statement calculations seamlessly. So our inflation accounting solution actually is an SAP add-on solution. So it works under the SAP ERP system. So it digitalizes your inflation accounting process according to Tax Procedural Law, International Financial Reporting Standards, and Turkish financial reporting standards. So our package is compatible with all regulations, so you can create your financial statements under each regulation in our package. On the other hand, using our solution, you can prepare your financial statements accurately by digitalizing the inflation accounting process with using our user-friendly interfaces. And by using our solution, you can use the fully automated solution package to obtain consistent financial statements in SAP environment during inflationary periods, and you can reduce the risks that we have discussed at the beginning of the presentation on your financials. So at the end of this adjustment process, you will have adjusted and not adjusted balance sheets and income statements. So you can make comparisons, you can make evaluations based on these reports, so you can make more effective decisions and more effective decisions according to your financial position of your company. In this slide, you can see the main modules that are used in our inflation accounting solution. The main modules are the SAP Financial Accounting module, Controlling module, Materials Management module, and the SAP Asset Accounting modules are the main modules that are in scope of our solution. In this slide, you can see the main components of our solution. The first component is the balance sheet indexing component. Under this component, we have indexing of fixed assets, indexing of inventory accounts, indexing of capitals and reserves, and indexing of prepaid expenses. In the second component, the income statement indexing component, we have income statement accounts indexing capabilities. And finally, we have inflation accounting reports. In this component, we have fixed asset comparison reports, inventory comparison reports, inflation adjusted main account comparison reports, and income statement comparison reports. So using these reports, you can make more accurate financial decisions, considering adjusted and non-adjusted financial statements. In this slide, the general working principle of our solution is summarized. First of all, our inflation accounting package is transported to your SAP environment. Our solution is compatible with different versions of SAP systems such as ECC, S4HANA, etc. So after the package is transported and customized according to your company's needs, then the correction factors to be applied to non-monetary items are determined using price indices. Then, using these indices, the relevant data is extracted from the relevant modules and the calculations are performed in the corresponding modules. And finally, the updated values are reflected in the financial statements, and the reports that we discussed in the previous slides are produced as a result of this process. Here, you can see the general high-level project plan for implementation of our solution. As we introduced at the very beginning, inflation accounting solutions are very popular in Turkey currently because the implementation dates are determined, and considering these dates, the companies started to switch inflation accounting solutions. And for this solution, we have 3 to 4 weeks implementation period. In this implementation stage, first of all, we have a project planning and preparation phase in which we have prepared the general project plans, and then we have functional analysis and conceptual design phase. After this stage, we make company-specific customizations and enhancements in your development system. After this stage, the unit and integration tests are conducted by our team. After the tests are completed successfully, the user trainings and user acceptance tests are completed, and finally, if these user acceptance tests are approved, then the package is transported to the production system and the hypercare period is initiated. During this period, if you face with some problems or some new requirements, then these are satisfied, and the standard maintenance period is initiated after the hypercare period. In this slide, we summarize the key capabilities of our solution. First of all, the Melasoft solution digitalizes your inflation accounting process, so you can re-evaluate your non-liquid assets faster and more effectively, efficiently by digitalizing your inflation accounting process and adjusting financial statements according to these price indices. So the process is automated, fully automated, and once the relevant information is supplied in the customizations, then the adjustments are made automatically in the background. Also, our solution is comply with the multiple regulations, so you can calculate your data in compliance with multiple regulations, including IFRS, TFRS, and Tax Procedural Law. After the calculation, the updated values are reflected to the corresponding financial statements. Additionally, in our solution, you can monitor the effects of inflation instantly, so you can recalculate the real values of non-liquid assets on SAP Analytics Cloud and that encounter depreciation with great inflation to ensure that you can make decisions with more realistic financial data. So the effects of inflation can be monitored and the decisions can be made more accurately as a result of the reports, by using the reports produced at the end of this process. Finally, you can always obtain dynamic and up-to-date financial statements. By digitalizing the inflation accounting process, we assure reliable and consistent financial statements. So you can compare the updated financial statements and the traditional financial statements. You can make comparisons and you can make your financial decisions more accurately. Also, our Melasoft solution uses its own namespace, so our own namespace does not contradict with your SAP other objects in SAP system. So during your developments or during your system upgrades, it does not result in any problem. This is another benefit of our solution. Also, we can customize our solution. If you have some specific integration requirements, then these requirements can also be satisfied by our technical team. So this is the end of our presentation. If you need more detailed explanations, you can visit our Turkish webinar. In this webinar, we provide more detailed information, especially about the inflation accounting calculation methods and also the process in Turkey. So you can visit the Turkish webinar also, or if you have additional questions or comments, you can get in touch with Melasoft team so we can answer your questions. Also, we can book demo representations according to your needs, your available time slots. So, Bradley, if you have questions or comments, then we can continue with the section.
Yeah, perfect. Thanks a lot, Yavuz. Yeah, and one more thing from my side is we've already started projects in inflation accounting due to the deadline at the end of this year. It's quite popular at the moment. So if you're a client or customer that's looking to have this implemented, I would definitely recommend booking a meeting with us and we can show our solution in more detail. Obviously, we do also have this same webinar in Turkish and it's on our YouTube channel as well. I'm just looking at some questions now. One of the questions, how does Melasoft stay up to date with the evolving landscape of inflation accounting regulations in Turkey? And how quickly can the solution adapt to change?
Okay, actually, this is the case for each our compliance solution, including inflation accounting and other solutions. We have a team of experts that continuously monitor the regulatory changes in different countries. So when a new update is published or when a new regulation is published, then we immediately take into account these regulations, we analyze it, and we inform our users about the issue. And then after this information, then we make the relevant changes, if necessary, on our solution, and then we implement the solution immediately. In most of the cases, if some changes or updates done in the solutions, there are some deadlines for this implementation. So considering these deadlines, we implement the updates as soon as possible, actually. Also, as Melasoft, we provide robust support and training after implementation. So, especially during the implementation phase, we give trainings for end users and also for technical users, as well as these trainings during the support phase. If required, we can again make some training sessions if necessary. Also, we provide all documentation for technical and end users, so these documentations can also be visited in case of problem or in case of you need some reference information.
Okay, thanks, Yavuz. Another question from a participant: how does Melasoft support companies in adapting to changes in inflation rates over time?
In adjusting inflation rates, of course, inflation rates are changing. It is a dynamic system. So in our solution, we monitor these inflation rates dynamically. So we get this information from corresponding governmental institutions on real time. So by using the real-time inflation rates, we make all calculations according to this information. So we develop some web services to get this information, and most up-to-date information is used in our calculations. So it is dynamic. We dynamically monitor all indices, price indices, etc.
Another question is, what are the advantages of Melasoft's own namespace? How does this affect your objects within the SAP ecosystem?
Yes, as I explained in Melasoft solution part, in all of our solutions, including inflation accounting solution, as Melasoft we use our own namespace in order to not to contradict with other SAP objects. So this is very critical, especially if you develop some other objects, some other programs in your system, or it does not contradict with standard SAP objects, especially during upgrades. You can upgrade your system without affected by our solution. So our solution supports different versions of SAP system. So in case of updates, we update our solution according to your SAP version. So this is another advantage of our solution.
Okay, we'll take the last question as well. It says, what kind of support does Melasoft offer to customers during the implementation and beyond?
First of all, at the very beginning of the project, we have a detailed functional analysis part. During this functional analysis section, our experts works with the experts of the companies, so they together analyze the system. After this analysis, the customizations are done and the product is customized according to specific requirements of the company. And after implementation, before user acceptance tests, we have trainings. We provide some trainings for users and also for technical users. So together with these trainings, we also provide the documentation. So this documentation includes all of the technical user aspects for using our solution. So if some new personnel are employed during time, they can easily read these documents, and they can also watch our training videos, so they can learn how to use our solution by these documentations and training videos. On the other hand, after maintenance period, after the package is implemented in production system and hypercare period is ended, our regular maintenance period starts. During this period, we have a ticket system. So if the users face with some problems, then they open some tickets explaining their problem, and our support team handles these problems as soon as possible according to agreement. So the problems are solved within the time limits defined in the agreement. So we have a continuous support, and also during time, if some changes occur in the regulations, as we said in the first question, I think, if there are some changes in the regulations, then these changes are also implemented, and the updates are done by our support team according to deadlines that are defined by the regulatory agencies.
Yeah, exactly. And I just want to thank everyone that attended. We'll send you an email afterwards with the link to the presentation. You can also email us at info@melasoft.com if you have any other questions, or you could email me directly, bradley.birch@melasoft.com, and I'm happy to answer any questions. Thanks a lot, everyone, for your time, and have a nice day or evening.
Thank you very much. Have a nice day.